have the head of Birla Sun Life joining in. We have Sashi Krishnan, the CIO of Birla Sun Life Insurance, who joins in our studios. Hi, Mr. Krishnan. Thanks very much for joining in. You know, I was looking at the FII stats and the nifty movement that we've seen in the past couple of trading sessions itself. We've netted around 1,200 crores in terms of FII inflows in just the past 3 consecutive sessions. Do you think that something has turned post the vote on account?
Well, specifically talking about the vote on account, I think there was nothing significant in the vote of account. I mean, if you look at the underlying trend in the vote of account, there were only 2 things that struck me. One was fiscal consolidation, the message that there will be significant effort to bring about fiscal consolidation, and 2, there will be a greater impetus towards moving the industrial sector. So beyond that, I think there was not too much of a message. So I don't think the vote on account has significantly turned why FIs have put in money into India. And I mean, if you look at it from a longer term perspective, I would think that there is some allocation that's happening to emerging markets. Among those emerging markets, India still looks better than some of the markets like China, where you've seen a big slowdown, especially with the latest PMI numbers, and some of the commodity exporting countries which are under pressure. And the currency has held out significantly better in India than the currency has held out in a lot of other countries, like especially in emerging markets. And if you put those 2 underlying themes together, the fact that Indian currency has held out and India looks better from a macro perspective than a lot of the other emerging markets, you will see some allocations coming to India.
Mr. Krishnan, hi, good morning. We all know that the big trigger for the markets will be the elections a few months later. The big question that everyone has is, how do you play the markets in the run-up to the election? While we do not know what the outcome will be, but just for the next few months till the elections, how should one approach the markets? Is there a possibility for pre-election rally, and therefore we should look to buy at current levels, or it's just an avoid given the uncertainty?
Well, I think the first thing I'd like to say is that politics in the long run is not a danger to equity markets or any asset markets. And therefore, though the underlying narrative at this point of time is politics, I think as investors who are bothered about staying invested for the long term in Indian equity and the Indian markets, I think we should really not take too much cognizance of all this noise that is happening.
But wouldn't you be worried about an election outcome and what repercussions we could see on the macros? I mean, that's what took place in the past 5 years. That was the biggest grouse for the markets as well. Fiscal deficit, current account deficit rising in the past 2 years. Yeah, so one way of looking at it is that, outcomes for the market could be binary. The immediate term outcomes in the market could be binary. If you've got a political dispensation that is stable, which can run the government for the next 5 years, then possibly equity markets will take some hope from that, and you'll have improving equity markets. If you've got a political sort of situation where the markets believe that you're not going to have stability and you're going to have change, frequent change in the political situation over the next couple of months, and there will be obviously uncertainty, and markets dislike uncertainty. In fact, if there's one thing that markets do not like, it is uncertainty, and that uncertainty could cause some short-term volatility in equity markets. Having said that, I said whoever comes to rule this country, assuming it's a stable formation, I think there are not too many choices before us but to, first of all, for example, get back growth, consolidate on the fiscal front, reduce our current account deficit. I think the choices are not, very different for anybody. And therefore, I would not be too worried about who comes to power, so long as it is somebody who can rule the country for the next 5 years.
Okay. Which brings me back to my earlier question, that this outcome will be known only a few months later.
Right.
How do we approach it till then?
So I think one way of approaching it is, I think you just try and take out politics from this whole thing and say that I don't know what the outcome of, what the political outcome is going to be. And even if you talk to psephologists, none of them are willing to sort of hazard or wager a bet on what will happen, and maybe they'll do it closer to April rather than doing it now. So I think if I take out politics from the whole thing, then I need to see what is it that I can sort of invest in today in the Indian market, so that I can sort of not only make money over the medium term, but at least be exposed to lower volatility in the short term. And therefore, I think one of the underlying themes which clearly can be played is the fact that global growth is returning. And if you look at a lot of Indian companies that are exposed to global growth, they could be a good space to play in. And there are a couple of, I mean, there are a fair number of, large cap Indian companies that are exposed to global growth. Getting this back to global growth, I mean, the US is expected to grow at 3.5%. UK, I mean, the Europe is expected to grow, I mean, get back into positive growth. Japan will again grow at 2-3%. So if you've got companies that are exposed to, the global markets, that could be a fairly safe place to play. The other sort of area that you could play in is, local consumption-led plays that are not really driven by what the political outcome is.
Sure.
And that could be a good, space to play.
Okay, so would that mean that you'd be looking at your typical IT or maybe your defensive sectors going into 2014 as well, something that outperformed in 2013? So do you expect the outperformance for, say, pharmaceuticals, FMCG, as well as for IT to continue? And would those be the sectors you'd like?
Yeah, so those sectors are exposed to the global markets. It would include healthcare, would include IT. Those sectors that are exposed to the local, the domestic demand, but are really not impacted so much by, a lot of this politics could be sectors like the media, and could be some of these consumption-driven names that are, market leaders and therefore, relatively immune to, how politics plays out.
Just touching upon consumption, because you just mentioned it, we've seen a slowdown. The Q3 earnings are also reflecting a slowdown in the consumption space. And we've seen a significant correction in many of these big players, or even these good quality mid-cap names. So would you recommend that investors should take this correction and go ahead and invest into these consumption stories?
Okay, now. Looking at private consumption has fallen significantly, and there is no doubt about that. And the two big reasons why private consumption has fallen, one is the fact that inflation itself is very, very high. And I think high inflation has led to private consumption sort of slowing down. And the second, I think, big impact is the fact that wage growth isn't as buoyant as many of us thought it would be. And therefore, if you put both these two together, slower wage growth and higher inflation, obviously private consumption is going to slow down. And if you get, till today, many of us were not buying into a lot of these consumption names, the FMCG names, because of the valuations. The valuations were looking extremely expensive, and therefore we said that this may not be the right time to do it. But if, because of a slowdown in consumption, a lot of these FMCG stocks correct to valuations that are reasonable, I think it would be a good time to look at them.
Okay, Mr. Krishnan, thank you very much for joining in. So that's the view coming in from Birla Sun Life Insurance. But do remember, for more on the markets or any other news which is reported on CNBC TV 18, all you have to do is just log on to moneycontrol.com anytime you want and get all of the details.